Hey, hello everyone, and good morning. Thank you for joining us today for our virtual open enrollment seminar. At this time, we will go over ASIFlex spending accounts. Before we get started, I would like to brief everyone on a couple of housekeeping items. Be informed that all attendees are muted and will remain muted throughout the presentation. And if you have a question, please type it in the chat box located on the right-hand side of the presentation screen. Be informed that if you type a question in the chat box, everyone attending the session will see your question and your name. So if you have a question that is sensitive or confidential in nature, we recommend that you reach out to the County Benefits Division or your department's benefits ambassador. Lastly, today's seminar is being recorded and a copy will be posted on the Benefits Open Enrollment website. At this time, I will turn it over to our presenter, Andy Megling.
Thank you so much. I'm happy to be with you today. I'm also happy to talk to you about some great benefits that are offered to you through County of San Diego, your flexible spending accounts and your health reimbursement accounts. You can go to the first slide. First, let's talk about what HRAs are. Health reimbursement arrangements, often referred to by their acronym, HRAs, are year-to-year accounts that are funded through employer funds. In your case, the county contributes to the HRA with your excess flex credits if you're not enrolled in a high deductible health plan or an individual plan. You can have up to $5,000 put into the account each calendar year, and you use those funds to pay for your current year's expected medical expenses. Unused funds are forfeited back to the county at the end of the year. And you can use your HRA to pay for expenses after your FSA pays if you're also enrolled in the flexible spending account, which we're going to talk about in just a moment. There is a carryover allowance of $640 currently for the healthcare FSA and the HRA, or if you're in both, it's a combined total. Next slide. Now we'll talk about what flexible spending accounts are. Flexible spending accounts are also year-to-year accounts. They run on the same calendar year as your HRA. You can set aside additional pre-tax dollars from your paycheck and to use that amount to pay for your expected medical expenses. There are 3 different types of accounts, though. You don't have to just use it for medical. You can also enroll in the dependent care. And if you are in the HSA plan, the high deductible health plan, then you can use the limited purpose healthcare FSA in conjunction with your HSA, which pays for dental and vision expenses. And the purpose of doing that would be to allow you to save additional funds in your HSA, since you could use your dental and vision, you could pay for your dental and vision expenses from your limited purpose FSA. The healthcare FSA pays first if you're in both the FSA and the HRA. The $640 allowance to carry over is also allowed with the FSA, but it's a combined total if you're in healthcare FSA and HRA. There is, however, no carryover for dependent care FSA. So you should only put in what you know you're going to use for childcare during the year. Next slide, please. We'll talk about how the accounts work, because you don't want to put money in if you're not going to be able to use it, of course. It's easy. First, you estimate your expenses that you're going to incur during the upcoming plan year. As we're approaching the open enrollment time, you're going to be looking at your expenses for 2025. We have an expense estimator calculator on our website that you can use, or you can look at some of your expenses from this year and think about what you may have next year, help you plan for what you're going to spend. Then you make those pre-tax contributions evenly from each of your paychecks over the course of the year. As you incur eligible expenses throughout the plan year, you'll submit a claim and get reimbursed for those expenses. And you can get reimbursed to your bank account or through check. Next slide. Because these types of plans are tax savings plans, they're governed by IRS regulations. So there are some things that you need to know in order to be compliant with those IRS guidelines. Each year, you must enroll with a new election. If you were enrolled in 2024, currently, your election will not automatically renew for 2025. You do need to make a new election each year. You are required to spend all of your funds during the year because unspent funds can't be returned to you. They have to be spent on eligible expenses. Expenses must be incurred during your period of coverage or during the plan year. So for 2025, you're only going to look at expenses that are incurred. That means the service happens in 2025 or the purchase is made in 2025. It does not matter if you're paying for something in 2025 that happened previously. Those expenses only qualify if the service actually takes place in 2025. You don't have to be covered under your employer's health insurance to use the flexible spending accounts. You can enroll in that regardless of what insurance you have. Your spouse and dependent children's expenses are automatically included in the flexible spending account. And to cover them in your HRA, you just need to certify them each year if they're on your plan, and their expenses will also qualify. Your election remains in effect for the course of the plan year, so you can't usually make a change to that mid-year unless you experience a qualifying status change event, for example, birth, marriage, divorce. You can access all of your healthcare funds at any time during the year. Up front, day one, January 1st, you'll have full access to your HRA funds and your healthcare FSA funds, even though you haven't contributed the full amount. Your annual election is available. Funds remaining at the end of the year forfeited, except for the carryover of $640 for the healthcare FSA and HRA combined. No carryover for the dependent care. Next slide, please. But it is easy to avoid forfeitures if you just plan for the expenses that you know you're going to have. Predictable and recurring expenses, things you have scheduled for next year, reviewing your prior year's expenses as a guide, and be conservative. Don't plan on having extra money just in case something comes up. And you can use the tools mentioned at ASIFlex.com, such as the expense estimator, the eligible expense listing. FSAstore.com is a great resource for over-the-counter products because every single thing on their website is FSA eligible. Even if you don't purchase it at FSA Store, you can check there to see if something is eligible, and therefore allowing you to spend any extra remaining funds you may have at the end of the year on over-the-counter items to stock up your medicine cabinet or first aid kit or anything of that sort. And remember, you can carry over up to $640 of healthcare funds. Next slide. All right, now we're going to look at what some of the types of eligible healthcare expenses are for your HRA and your healthcare FSA. Next slide, please. With the healthcare FSA, there are many types of eligible expenses. This is just a brief summary. If you look at the website, the eligible expense listing, you'll find thousands and thousands of possible ways to use your funds that you've set aside for your HRA and your healthcare FSA. So this slide says healthcare FSA, but all of the same expenses that are eligible for healthcare FSA are also eligible for your HRA, such as prescription medications, office visits, co-pays, deductibles, x-rays, lab work, hospital bills, and mileage to and from healthcare providers is also eligible. Over-the-counter items such as Band-Aids, sunscreen, braces, such as wrist or knee joint braces, first aid supplies, pill holders, blood pressure monitors, thermometers, diabetic supplies, menstrual care supplies, and over-the-counter drugs and medications are eligible. Vision expenses such as vision exams, eyeglasses, prescription sunglasses, contact lenses and solutions, reading glasses, and LASIK eye surgery is even eligible. Dental expenses are eligible such as exams, x-rays, fillings, orthodontia, even for adults. So for children and adults, braces are eligible. Crowns, bridges, dentures and adhesives, occlusal guards, and implants are all eligible expenses. Generally, the only dental expenses that would not be eligible are those that are just for cosmetic purposes, such as teeth bleaching or veneers. Hearing expenses, such as hearing exams, hearing aids, and batteries, are all eligible. And for the current year, $3,200 is the maximum that you can contribute to the healthcare FSA. $120 is the minimum for the year. As a reminder, your HRA flex credits you can have up to $5,000 in the HRA. Okay, next slide, please. The limited purpose healthcare FSA, as you recall, this is the one that's compatible with an HSA. So if you're enrolled in that high deductible health plan and you have an HSA, you can still enroll in this limited purpose FSA. And this will allow you to pay for vision expenses and dental expenses with those FSA funds, so you can save more in your HSA. All of the same vision expenses and all of the same dental expenses that are eligible for the full healthcare FSA and HRA are eligible under the limited purpose FSA. Next slide, please. This is just a summary list of the types of over-the-counter expenses that are eligible. If you've been enrolled in the plan for several years, you may remember when a prescription was required for over-the-counter drugs and medications, but is no longer required. So you can just go to any store that you choose to purchase from, or online site, Amazon, or even FSA store, and make your purchase. If you wanted to check if something is eligible, again, FSAstore.com is a great resource because every single item on their website is FSA eligible. And the left column, the general over-the-counter healthcare products, you might see such things as baby monitors are eligible, so lots of baby equipment, bandages, breast pumps, birth control, diabetic supplies, glucosamine tablets are eligible. They're one of the few supplements that are eligible without a doctor's note because they're proven to be used for arthritis and joint issues. Home medical equipment such as humidifiers and blood pressure monitors, and sunscreen, and even products with sunscreen of SPF 15 or higher, such as lip balms, facial moisturizers. All of those types of things are eligible. You can find this list on our website as well. In the right column, over-the-counter drugs and medications include all kinds of acne treatments, allergy medicine, antacids, anti-itch, aspirins, cough medicine, cough syrup, ear drops, eye drops, hemorrhoid medicines, laxatives, nasal sprays of all kinds, even just saline or medicated nasal spray, pain relievers, sleep aids. So many different types of over-the-counter products, medicines that you can use your flex spending dollars for. Okay, next slide, please.
Andy, before we move forward to the next slide, I just wanted to go over some questions that have come up in the chat, if we can.
Yes, please. Yeah, that'd be great.
Okay. Let's see. One of the individuals requested, where can we submit a claim? And I would like to share with the audience that my colleague pasted in the chat a link to the ASIFlex website, as that is where you would be able to file your claims. And I also like to add on to the ability that you can file your claims through the ASIFlex mobile app. I actually take advantage of that myself, and it's very efficient, very quick, easy process.
Yes, thank you. You covered it. We are actually going to go over that as well, but thank you.
Perfect. And this next question I'm hoping you can answer. Is there a maximum limit dollar amount for the limited purpose FSA?
Oh, yes, I'm sorry. It was on the slide, but I forgot to say that is the same as the general healthcare FSA. 3,200 is the limit.
Excellent. Thank you. Another question. It was explained that we would have to file a claim. Oh, it shifted. did. Let me back that up. It was explained that we would have to file a claim and then get reimbursed. However, a little after that slide, it was mentioned that the amount set by us is available at the beginning of the year. Could you please explain the difference and what that means?
Yes, the amount is available to be used for eligible expenses. For example, if you elected a total annual contribution for 2025 of, we'll say, $1,200 to make the math easy, you won't have contributed $1,200 as of January 1st. You would put in $100 each month of the year, but you could spend $1,200 if you had a larger expense at the beginning of the year, maybe had a dental procedure that cost $1,200, you could go ahead and get reimbursed the full $1,200, and then it still comes out of your paycheck, $100 a month for the remainder of the year. So you are eligible to get reimbursed for that amount, but you would still have to submit a claim for an eligible expense. Does that help?
I believe so. Okay. How about FSA debit cards? Are those available to county employees and ASIFlex members, participants?
Well, ASIFlex does offer debit cards, but the county chooses not to use them, but to be reimbursed instead. So that is not, unfortunately, an option for county employees. They can get reimbursed. You don't necessarily have to pay for your expense before you get reimbursed, though. We never require proof of payment. If you have a hospital bill, a dental bill that's gone through insurance, but you haven't yet paid it, you can go ahead and submit it and get reimbursed, and then use your reimbursement to pay it if you want to. Of course, there are purchases you will have to make in order and pay out of pocket in order to get reimbursed. But for many things, that wouldn't be necessary, and your reimbursement isn't dependent upon the fact that you've paid it. We'll also look here in a minute at cardless pay, which is an option for purchasing over-the-counter products through FSA Store without using a debit card or without needing to submit a claim.
Thank you, Andy. And we had another question come through that I'm happy to answer, where the individual's asking if there's another company other than ASI Flex. And the answer to that, we do only contract with ASI Flex for our spending accounts. Um, Hopefully that answers that question. Another one, Andy. Hi, I would like to know if Uber rides or other non-emergency medical transportation are eligible for reimbursement as mileage to and from healthcare providers. Also, do I need to obtain a written note from my doctor for this type of reimbursement?
Good question. Ubers are eligible as long as the transportation charge is only to go to any of the services that we've talked about, hospital visit, a doctor's visit, pharmacy visit, even to the store to purchase over-the-counter medications. That would be an eligible expense. And the full cost of the Uber, other than the tip, would be eligible, and other such ride share plans. If you choose to drive yourself, you are reimbursed at the mileage rate, which is, there's a medical mileage rate each year, and I believe it's 21 cents per mile. So you can do either or. You wouldn't take both the mileage and the cost of the Uber or the Lyft. But yes, that would be eligible if the transportation is for a medical purpose.
Okay. Looks like if we can go back to the clarification question about when you set aside your money for yourself and then you get reimbursed. And this is for Arturo. Let me look at the previous question. I believe you did answer that, Andy. So it sounds like they're still asking for clarification. The money is coming out of my paycheck, but then I also have to spend the money and then get reimbursed. Is that correct?
No, as I mentioned, you wouldn't necessarily have to pay your bill in order to get reimbursed. We don't require proof of payment, but an expense does have to be incurred. For example, if you went to the dentist and you had a procedure done, but you didn't pay anything because it was going to be processed by insurance first, you've already had the procedure, you haven't made payment, you could go ahead and submit the bill for reimbursement before you have to pay it. so that you could get reimbursed before you have to make payment. So you wouldn't be required to pay for an expense before you get reimbursed. It may happen that way. Sometimes if you went to buy cough medicine or allergy medicine or something like that, the store would make you pay for it, and then you would have it paid out of pocket. But reimbursements actually happen really quickly. The county reimburses once each week. If you submit your claim by Tuesday of the week, then you're reimbursed on Thursday of that same week. If you sign up for direct deposit, your reimbursement's even faster because then it goes directly to your bank account, so you don't have to wait for a check to come in the mail or take it to the bank or anything like that.
Excellent. We got a thumbs up that makes sense. Thank you, Andy.
Oh, good.
Can we
Of course.
cover an additional question? My daughter has started on an orthodontic treatment plan that spans 17 months. This treatment plan includes monthly payments. Since the treatment plan was started this year in 2024, but the payments will continue through next year, will the monthly payments occurring in 2025 be eligible for reimbursement?
Yes, also a great question. Orthodontia is a bit unusual in that it's considered an ongoing expense. So the IRS allows that ongoing expense to continue even across plan years, as long as the treatment is still ongoing. That means the braces are still on or the Invisalign is still on. So as long as the treatment hasn't been completed, you're still paying for it, there is an ongoing recurring expense. And it's perfectly fine to include those payments for 2025 if the braces are still on.
Excellent. Thank you for the information. And we had another question that came through. What if you pay for your daughter's dental procedure? Would that be covered? And that would be a yes.
Yes, yes. Spouses and dependent children's expenses automatically qualify with the healthcare FSA. And with the HRA, they also qualify if you certify them as eligible dependents.
And just to add on to what Andy just explained about certifying them as eligible dependents, you would physically need to go into your account with ASIFlex and list your dependents. So that way, when you do submit your claim, they're listed and they can reimburse you based on the dependents relationship and you've already certified and physically listed them in the system.
Thanks, Nidra. Yes, and we will send out reminders during the year to do that if you haven't already done that. You're very welcome.
Looks like chat box a little quiet. Would you like me to go to the next slide?
Yes, next slide, please. We have already gone over this, but the healthcare funds are available anytime. So this is just a little example. If that helps you visualize it, if you contribute that $100 per month, you'll have $1,200 annually for the year. Let's say on March 15th, you incur a $500 expense. Obviously, you wouldn't have contributed $500 yet. If you're only doing $100 a month, you would have put in $300 by March 15th, but you'll still get paid the $500 because your annual election of $1,200 is available in full. All right, next slide, and we'll talk about dependent care. For those who have young children or children in child care, on the next slide, if you want to go ahead and advance, we'll look at what some of those, and each one of these will come up with a separate click, Nidra. There is a maximum for the dependent care each year of $5,000, and this is a family maximum or a household maximum. Unlike the healthcare maximum of $3,200 is an individual maximum. So if you and your spouse both work for the county or both have access to a flexible spending account, you can put in the maximum for each of you and combine for $6,400 if you wanted to. The dependent care, however, is limited to $5,000 for the whole household. So be sure if your spouse is also enrolled in the dependent care that you're not combining for more than $5,000. And the limit is $2,500 each if you're married and filing separate income tax returns. And some of the types of dependent care expenses that are eligible, go ahead and click for the first one, is babysitting, and that would include any babysitting that's done to allow you to work, or if you're married, your spouse to work as well. This could be a babysitter that you take your child to, or a babysitter that comes to your house. They don't even have to be a certified daycare for the expense to be eligible. Could be, it pops up because you have an emergency at work you've got to go take care of. You can have a babysitter just come, pay them, and their expense would be eligible. All right, next click will be preschool or nursery school for young children. Any type of home daycare or child care center as well. If your child is not yet school age, their all-day daycare expenses qualify. Next click. This is also including before and after school care. If your children are in school age, are in school, if you have to pay for any care before school or any care after school, those expenses also qualify. Next click. Day camps qualify. Day camps that you would have, such as during the summertime when school's not in session, or camps that you might have over holidays when there's no school. These would be eligible regardless of the child's age up to the limit. Go ahead, click. The next bubble indicates the age at which a child is no longer eligible generally is the age of 13. So a day camp for a child under the age of 13 would be eligible. There are many camps that happen for children over that age, usually maybe sports specific or theme specific. Soccer camp, basketball camp, something like that may happen for your teenage child, but those would not be eligible. It must be for childcare purposes, mainly for childcare purposes. If there's education happening that's incidental, that's perfectly fine. And go ahead and click one more time. There is an exception to the under 13 guideline. If you have a child or an adult dependent who's over the age of 13, but they're not capable of self-care due to, for example, a physical disability or intellectual disability, then their expenses would still be eligible. This is self-certified, so you would just need to let us know that you're claiming expenses for a child who's over the age of 13 or an adult parent who's over the age of 13, clearly, but they're not capable of self-care due to whatever diagnosis. Okay. Before we go on, I did see that there were some questions related to dependent care. Nita, do you want to?
Yeah, I can read those out to you.
Thank you.
Question, if you are not married but living with your child's father and child and both have custody, are you not eligible for dependent care?
You're not married, but you're living with, and so neither one has custody, or you just split custody?
Oh, they both have full custody.
Both have full custody. Well, in that case, the care would be eligible, yes. In cases where there's a divorce situation and it's completely split custody, exactly 50-50, there is not eligibility. You would need to take the child care tax credit on your tax return instead if you're eligible for that. But in this situation where both have full custody, you would be eligible for the $5,000. You just couldn't combine for more than that if both of you were participating. So whoever generally pays for the child care in that situation is the one who should take out the account.
Excellent. Thank you, Andy. Just to circling back regarding preschool reimbursement, is it covered until 5 years of age? Is that correct?
Um, in It depends on your situation. So if your child isn't yet eligible for kindergarten, even though they've reached age 5, that's okay. Depending on where you live, that might vary, or your child's specific circumstance. Maybe they're too young or too socially not ready for kindergarten or something like that. So they start kindergarten late. If they're not yet in kindergarten, no matter what age they are, then those expenses for preschool would still qualify.
Excellent. A great question regarding babysitting. Can I pay my older child, 16 years old, to babysit the younger one? And if so, what are the requirements, if any?
Yeah, that is a good question. Unfortunately, no, you cannot use the funds to pay an older dependent to care for a younger dependent, including your spouse or older children. You can pay a relative who's not a dependent of yours. So if you send your children to your mother-in-law's house for childcare and you pay her, then you can certainly use the funds to pay for that, just not another dependent of yours.
All right, excellent. Looks like the chat is a little silent right now.
All right. Well, look, let's go on. We'll talk about the difference here in how dependent care is reimbursed versus how the health care is reimbursed. With dependent care, you're not able to get your full annual amount up front as you are with the health care. So you can only be reimbursed the amount that you have contributed up to that point. So for example, if you contribute $300 per month and you have a $3,600 plan year election, and as of January 31st, you have paid $500 for childcare, you can go ahead and submit that for reimbursement, the $500, but you will only be able to get $300 reimbursed then. The plan will pay you that $300, but the $200 that you claimed above and beyond the $300 will be as a pending claim in your account, and that will automatically be reimbursed to you the next time you have a contribution made from your paycheck. Okay, so it does work just a little bit differently. Next slide, please.
Before we move forward, just a go back question, Andy, regarding the scenario for, the older sibling could not babysit, but a family member could. Um, would the mother-in-law need to claim this income on their taxes?
Technically, yes, they would. So especially if it's a main source of income or a significant amount of income, they should talk to a tax advisor about that. But yes, technically it is income for her, so she should claim it.
And are you aware of any process to pay the relative to babysit?
There's not a required process. You can pay them cash. You can pay them um, by check or any electronic method, Venmo, however you want to pay them. You would just need to either have them sign the claim form to verify the amount that they paid you for the period of care that you paid them for, or they can provide you a receipt. Any type of handwritten receipt, typed receipt, emailed receipt would suffice. It can just indicate how much was paid, what the period of care was. So say you paid for 1 week, your mother-in-law $200, you could indicate the week of September 9th, 2024, $200 paid by and to, and just either have her sign it or send it. That works as your receipt. But having your provider, even if it is your mother-in-law, sign the claim form works perfectly fine, and then they don't need to provide any kind of receipt.
Andy, we had someone share some information in the chat that I just want to read out loud, and maybe if you can piggyback on this.
Sure.
The comment is important to note when you book summer camps in advance, you can't submit for reimbursement until after the camp is over. This individual had theirs rejected because they submitted too early. That's something you can elaborate on as well for the audience.
Yes, I sure can. That unfortunately happens more than just to you because summer camps do require that advance registration fee, maybe even the full amount paid in advance. But IRS regulations do require a service to be provided before reimbursement can be made. This goes with medical as well as childcare. So if you paid in advance for a dental service that you were going to have, you couldn't be reimbursed until you actually had that dental work done. Same with childcare. If you pay for childcare in advance of it actually occurring, you can't be reimbursed until the service happens. You could submit it. If it's for a month of care, you could go ahead and send it in at the beginning of the month. That's fine. We'll go ahead and process it then for that full month. So if you pay for childcare that's going to happen in the month of June, you pay for it in February or March, just hang on to that and submit it the beginning of June, even though the whole month of June hasn't passed. Some of it has. We'll go ahead and process it at that time. But care does have to happen, does have to be rendered. And this is an IRS regulation, not an ASI regulation. We would rather just go ahead and process it when we get it rather than making the extra step of sending you a denial notice and having you resubmit it again. But unfortunately, in order to be compliant with IRS regulations and auditing, we do have to have the service provided before it can be reimbursed.
Excellent. Thank you. Looks like we're silent in the chat box for now.
Okay, great. Then we can go to the next slide and talk about the claim filing options, ways to use the funds that are in your account. And this will apply to all of the accounts, HRA, FSAs, healthcare limited purpose, and the dependent care FSAs. You can use the mobile app, as Nidra already mentioned. That's a really quick and convenient way to submit a claim, an electronic claim that goes immediately to us and is processed within 1 to 2 business days. It allows you to just take a picture of your receipt or your bill with your phone, so you don't have to upload anything. You do need to set up an online account in order to use the mobile app, and you'll use the same credentials for both the online account and your mobile app. You assign your own username and password. With the online account, you can go to our website, ASIFlex.com, go to your participant portal and just click submit a claim. It's real quick and easy to do a claim. Only a little bit of information is required, such as the date of service, the name of the person for whom the care was provided, the cost of the service or the amount that you're claiming reimbursement for, a brief description of the service, and the provider's name. So just 5 pieces of information. And depending on the browser you use, it will probably save that if you have the same provider over and over again. I know for me, when I go to fill in a claim, that information is already there because I've already used that provider before. The dollar amount may be saved as well as the description of the service. So all of that information, you could just click and it's there. In addition, I mentioned the FSA store cardless pay is an option, which is really great if you want to order or purchase over-the-counter items. They have thousands of products on their website. And it's very convenient because everything is FSA eligible. So you can go directly to the FSA store from your ASIFlex account, and it will connect your balance. So the FSA store will allow you to just pay them from your FSA balance, and you won't need to enter any credit or debit card information. You won't be paying out of pocket. You'll be paying from your HRA or your FSA, your healthcare FSA. ASIFlex will pay FSA store, and the items will just be shipped to you. You won't need to submit any claim because you won't have paid anything. The money will just be paid directly to FSA store from your account. So that's a great option that you have available to you. You do need to make sure you sign up for an ASIFlex online account, first of all. And then there are also options to fax and mail claim forms, which you can download from our website, asiflex.com, if you'd like. Next slide, please. Just a little bit more about the mobile app and some screenshots here of how the interface looks. It is a free app, and there's a video tutorial on our website if you need any review on how to use it. You can use it on a smartphone or a tablet. Just snap a picture of your documentation. You can submit it on the go. I've often gone to the doctor's office where I've needed to pay a copay and been sitting around waiting to be seen by the doctor, and I will just go ahead and submit my claim, and it just takes a couple of minutes. It's done before I even leave the doctor's office. And you can also use it to check your balance 24/7. Next slide, please. This screenshot is how you would sign up for an online account. So at asiflex.com, in the upper right-hand corner, you will see participant employee login. And when you click it, this is the screen you get. Ask you for your username or password, which is where you would put if you've already signed up for your account. You'll put your username and password. If you haven't yet, you will click the blue button that says create an account. And you'll just be prompted for some information such as your name, your employee ID number or social security number. It's looking you up in our system to connect to your account. Your zip code is requested, as well as your employer email. So that would be the email address that your employer has sent us, most likely your county email. Okay, next slide, please. The FSA Store Cardless Pay is super easy to use, as we discussed. You do need to sign up for that ASIFlex account. And then when you log in, you have the option. It looks like that button up in the upper right-hand corner of the slide, FSA Store Shopping. You click to go to the FSA Store from your account. Once you're logged in, it will connect to your balance. So you can select your products, and then when you get to checkout, you just choose the ASIFlex payment option. And that's it. As long as there's enough in your balance to cover the purchases that you made, then everything's good. It will just pay from your account and your items will be shipped to you. Next slide, please. Okay. Documentation that's required for reimbursement of claims sometimes gets confusing, because maybe the doctor's office only gives you a receipt showing that you paid something, or maybe they don't give you any receipt at all. But documentation is required by IRS guidelines, and the documentation needs to have these 5 pieces of information, which you'll recognize as though the same 5 pieces of information that you're required to enter when you're submitting a claim. Who, that's for whom the service or supply is provided. What, a description of the service or supply, which doesn't need to be detailed. We don't need to know what you saw the doctor for. If you went to a doctor's visit, it could just say copay or checkup or doctor's visit. It does not need to specify what you saw the doctor for, what they did to you while you were there. So a really brief description. Where is the name and address of the provider. When is the date the service was provided, not the date it was paid or billed. So a paid receipt doesn't indicate date of service. A paid receipt could be for payment that was made after the service happened, or payment that was made before the service even happened. So a date of service needs to be specified or obvious, because there's a date next to a description of something that happened. And the dollar amount would be how much you were charged or how much you owe for that service or item. For the type of expense that you have, if something's covered by your insurance, either medical, dental, or vision insurance, and it's sent through the insurance carrier, an explanation of benefits that you get from your insurance company is ideal documentation. You can just use that, and then you don't need to send anything like a bill or a receipt. You can just use the EOB. If something's not covered by insurance, then just get an itemized statement from your provider. It's good to ask for this before you even leave the office, if you're at a visit. If you need to get a pharmacy printout for prescriptions, they can often print that out and email it to you, fax it to you, or you can ask for it when you're there. Also, you can use, if you do mail order pharmacy, you can use that mail order receipt, either the one that's emailed to you or the one that may come in your box. And for over-the-counter products, just that itemized merchant receipt, the cash register receipt, works well. That is the exception to needing the name of the person for whom the supply is purchased. A cash register receipt won't generally have that on it, of course, but it will have everything else, and so that's okay. Okay, next slide, please. Documentation for the dependent care FSA follows the same general guidelines, but instead of having a receipt, as we talked about, you could just have your daycare provider sign the claim form. If they do provide you with a receipt, then it needs to have these 5 pieces of information, just like a healthcare documentation would. Who, that would be the child's name or your name for who the care is provided. What, we'll just say childcare, preschool, babysitting, something to that effect. Where, the name of the provider. When, would be the dates of care. So it could be, the week of care, it could be the month of care, or just one individual date. and the dollar amount. That's how much you owed or paid for that time period. Did I see a question?
Yes, there is a question, Andy. My child's dentist recommended a particular toothpaste, which I purchased at the dental office. I submitted this to ASIFlex and it was denied. Did the toothpaste need to be written in a prescription form?
Yes, so basic hygiene items like toothpaste, toothbrushes, soap, deodorant, they're considered personal hygiene products generally. If your doctor feels that a specific type of toothpaste is necessary for a specific medical condition, the toothpaste could be covered, but only the cost that's above what a regular toothpaste is, because everyone needs toothpaste regardless of their medical condition. So you could get that cost covered if it's above and beyond a regular tube of toothpaste, but the doctor's letter would need to specify the reason why this specific toothpaste was medically necessary. So you would just need a letter. We have a template on our website for a letter of medical necessity that you can just fill out and have your doctor or your dentist sign. And they would just need to list that medical condition and why that what the recommendation is. So they would write whatever that kind of toothpaste is needed to treat gingivitis, periodontal disease, or whatever it is. And then they sign it and you could submit that. We keep the letter from the doctor or dentist on file for 1 full year. So if you would need to make another purchase for that toothpaste or that same item again during the year, you don't need to get a new letter that is kept on your account. But yes, toothpaste is not considered a medical item unless there is a medical need. That's why it was denied. You could still get it covered if your dentist can do that letter. They'll just submit that and they'll reprocess the expense.
Excellent. Thank you for that information, Andy. Another great question has come through. If you have never used your ASI balance, do they get forfeited or does it roll over? And the second question, can the PowerPoint be accessible for us to review? I'll answer that right now. If you send an email to the benefits division, we'd be happy to provide a copy of the slide deck to you. And I'll put the email address in the chat for you all. So Andy, if you can answer the other question about forfeitures or rollovers.
Yes. If you haven't ever used your balance, it's likely that and you've been enrolled for multiple years, it's likely that you have forfeited some of your available funds because only 640 can roll over. And last year it was 610. So that amount goes up each year. The IRS, the federal government actually sets the limit on that carryover. The County of San Diego tends to go with that full maximum that they're allowed to do by the IRS. So if you had more than that, and you can certainly call in or send an email to asi@asiflex.com and they can check and see if you want to know. Maybe with forfeitures it's better if you don't know, but you don't want to lose anything this year, and that's for sure. So if you ever need to check your balance, I encourage you to set up that online account. You can put the mobile app on your phone and sign in. It will keep you signed in so you can check your balance quickly and easily. Make sure that you don't lose anything. If you've had any medical expenses that have already happened this year, you can go back and submit those claims. You just need to get the receipts or the bills or the EOBs to us, and you can still get reimbursed for anything that's happened this year. Just because it's September doesn't mean you've lost anything for this year. For 2023, it would be too late to submit those expenses at this time. We'll talk about the deadline for filing coming up, but you only have 90 days after the end of the plan year to submit your claims for reimbursement.
Excellent. A couple more questions, Andy. If we can revisit dependent care FSA, is there a maximum for the dependent care FSA?
Yes, the maximum is $5,000 for the dependent care FSA per year. That is a household maximum, not an individual maximum. I know that's not a drop in the bucket compared to the cost of childcare these days, but it is still nice that you can save taxes on $5,000. If you consider that most people's tax bracket puts them around the 30% mark, that's a good savings of $1,500 each year. on the 5,000.
Excellent. How about does a domestic partner qualify as a dependent on Flex?
Domestic partners only qualify as a dependent if they live with you and you provide more than 50% of their support. So they would have to qualify as a tax dependent in order to be eligible as a dependent.
Great. A question regarding diabetic test kits and test strips. Are over-the-counter glucose meters, test strips, and lancets eligible to be reimbursed? And is there any requirement to submit the claim?
Yes, all diabetic care supplies are eligible. All the test strips, the lancets, everything you mentioned, the glucose monitors, even the continuous glucose monitors, all can be purchased over the counter, but if by prescription or over the counter, it's all eligible, regardless of how you purchase it. Yes, a claim does need to be filed with the exception of purchases made at FSA store. If you purchase something at FSA store through the cardless pay, which they have these types of items available, I believe, then you would not need to submit a claim for that.
Excellent. Another good question. Can we call ASI directly for specific questions and request for instructions? And that would
Please.
be a yes.
Absolutely. My last slide today will be our contact information, but you don't have to wait until then. If you want to go to our website now, asiflex.com, the tab that says contact us has all of that information, phone number, customer service hours. We are located in the Midwest, so we're on Central Time, but our hours are for Pacific Time, 5 a.m. to 5 p.m. Monday through Friday, and 7 a.m. to 11 a.m. on Saturday. You'll always get a live person when you call ASIFlex. You don't have to talk to a robot or a recording, and you can get help anytime. You can also chat, do a live chat with us during those same hours if you log into your account.
Righty. Another question. If I currently have a limited purpose healthcare flexible spending account and I elect to enroll in an HMO plan next year, will my LPFSA roll over into the next year?
That's a good question. It will roll over, but it will still be limited. You'll still be only able to use those funds. Um, well, let me think about this. So you're an HMO, you're not in an HSA.
Well, let's
So
see.
the
Let
funds
me.
with limited, yes, would roll over and become available to you as full healthcare funds. That's a tricky one. You will still have your HSA available to use, but in a new plan year, you could then be in the full healthcare FSA. And so your carryover funds would not be limited, but you can only roll over the 640. So just keep that in mind. You would want to spend it down to that amount or less.
Great. Another good question has come through. You guys are awesome with these questions.
Yeah, great
I'm even
questions.
learning some things. If you participate in a weight loss program such as Weight Watchers, would these fees be eligible for reimbursement?
That is a great question, a really common question as well, because there's so many people that are, trying to lose weight, but some of them actually have a medical need too, and some just want to look better, right? So it does require a doctor's note to know which it is for you. And if it is a medical need, because your doctor has said, um, that you need to lose weight for a medical condition, even if it's for pre-diabetes or obesity or whatever that is. There's a number of reasons why your doctor would say it's medically necessary for you to lose weight. So they just need to use that letter of medical necessity. They can write their own, or you can use the template on our website, submit that once per year, just as we talked about with the toothpaste, and then your Weight Watchers fees, not food, just so you know, diet food or special food is never covered, but the actual fees for the group, the counseling, or the services that they're providing to you would be eligible. Just not supplements and not food. Supplements may be eligible too if your doctor specifies those are necessary, and not just weight loss in general. So my rule of thumb is with the the letters of medical necessity, they should be specific as to what your purchase is. If it says you need to lose weight by using a weight loss program, then your weight loss program fees would be eligible, but not your gym membership fees, right? If your doctor's letter states that you need to exercise to lose weight, then your exercise fees would be eligible, exercise classes or gym membership or home exercise equipment or whatever it is. So weight loss is pretty general. They just need to be as specific as possible.
Okay, no more questions in the chat so far. Oh, wait, another one did come through. Sorry.
Yeah.
What if the supplements or meal replacements are part of the program and included in the cost?
If they're included in the cost, there's no breakdown whatsoever, then it would be covered because it would be all one cost. If there's any kind of breakdown on the expenses where you pay extra for your food, which is more likely, at least from what I've seen, you do pay extra for the food plan that you're on, or the supplements would be covered under the plan if they were part of your doctor's letter or if they're part of the lump sum charge of the plan. But the food would never be eligible since everyone has to eat unless, as you said, it was just part of the whole plan package and not broken down at all.
All right, now looks like no more questions. If you want to move forward, I can push the slide through.
Yes, we can move forward. That'd be great. We do encourage everyone to go green. This is not only better for the environment, but better for you because you're more likely to get your payments and your notifications more quickly and securely. So get your information faster. Sign up for email and text alerts. You'll avoid getting paper in the mail and having your mail delayed. As I said, we're in the Midwest, so you're on the West Coast, and mailing will take a few days at least with the longness that the post office is taking these days could be even longer. So just sign up for email and text alerts and avoid all of that hassle. Sign up for reimbursements made directly to your bank account too. This is very secure. You can make these changes if you should ever have a change to your bank account. You can do that directly through your online participant portal. And you can check to see what bank account is set up for you currently, or if there is one set up for you. This will avoid having to get paper checks in the mail, waiting on that reimbursement to come, and then having to take it to the bank once you do get it. You can submit your claims through the mobile app or online to avoid any paper claims or mailing or faxing. It is quick and easy. And automatic reimbursement for dependent care FSA claims is also something that you can do. So automatic reimbursement, if you are somebody that pays your daycare provider the same amount each month or each week, then you are probably a good candidate for this option. You can have your provider sign the form, which is available on ASIFlex.com. They sign it one time per year to authorize that, for example, you pay them $500 each month. Then you don't need to send in any forms. You don't need to send in a claim for $500 for February and a $500 claim for March and $500 for April and so on. You just send the one form in January as an example, and we will submit that for you each month. So each month that comes up that's listed on that form, we will go ahead and automatically reimburse that to you. You wouldn't have to send in additional forms. So this does save paper and a lot of hassle if you have a consistent amount that you're paying your provider. Okay, next slide, please.
Okay. One question has come through, Andy.
Sure.
We can cover how many days does it take for a claim to get reviewed and approved?
Great question. It's generally 1 to 2 days. Peak times, it could be up to 3 days, generally 1 to 2 days. And then the county's schedule is if we can get the claim processed before 2 o'clock on Tuesday, it will be reimbursed that same week on Thursday. So payments are only made once a week with county employees, but if we have it by Tuesday, or if we have it processed by Tuesday, which it takes 1 to 2 days generally, So if you want it to be paid out the following Thursday, you should try and get it to us by Sunday or Monday of the week for payment on Thursday.
Okay, excellent.
As we wrap up today, I just want to share some additional resources from our website. When you're on the main part of the website, you can view the extensive eligible and ineligible expense listing. You can search alphabetically for whatever it is that you want to check on the website. Do be sure that you click on the item when it comes up so you can read additional information about it, because some things that are listed there do require a letter of medical necessity. So even though they're on the eligible list, they have a special requirement that they'll need that letter. So click on it to read about that. Access the FSA store to just look for what is eligible as far as over-the-counter products. When you're logged in, you can shop the FSA store with the cardless pay. We also have answers to frequently asked questions on the website, which you might be able to find some of your questions there. You can use the tools such as Expense Estimator and Tax Savings Calculator, view educational videos, which have been recently updated, and access IRS forms and publications. And logged in to your own account, you can access your account detail to see what your balances are and what claims you have processed or pending. You can review your secure messages, manage your personal settings, such as updating your email, text notifications, bank information. You can submit claims directly through your online account and shop FSA store using cardless pay. Okay, I saw some questions pop up. Shall we take those?
Absolutely. Let's see. For the FSA store, are purchases made for baby products ahead of baby being born or approved? Or are they allowed? Or should we wait until after baby is born to make the purchases in the FSA store?
It's perfectly fine to make them before the baby is born. They're as much for mother as they are for baby, right? Um, Things like breast pumps, you're going to want to get all of that ahead of time, and it's perfectly fine to purchase those before your baby comes.
Another question, if you have a balance and you buy at the FSA store, do you have to pay with that balance?
I'm sorry, could you repeat that?
Sure. If you have a balance and you buy at the FSA store, do you have to pay with that balance that's available in your FSA account,
Oh,
I'm assuming?
no, you don't have to. That's it's a nice option that you have, but you do not have to do that. You can instead just go ahead and pay. So maybe you have a credit card that you like to earn points or cash back on or something. You want to pay for your purchase with your credit card and then submit a claim. All you would need to do is upload that receipt from FSA store and get reimbursed for it. You don't have to use the balance, the cardless pay option, the direct pay that we've been talking about. You certainly don't, but you can do that. Any others?
That's it for now.
Okay, we'll go to the next slide then. Just a reminder about some important dates. The plan year runs from January 1st through December 31st. So when you're planning for next year, look at the expenses that you're going to have during that time. Anything that happens after January 1st before December 31st would be eligible. Your open enrollment is going on soon, October 1st through October 24th. So if you need any help in deciding how much to put into the plan or whether you want to sign up or have any questions regarding that, give us a call or chat with us. We'll be happy to help answer those prior to or during your open enrollment. Remember the deadline to submit claims. You have until March 31st of the following year to submit any claims that you have. This should give you enough time for anything that you had happen in the late months of the year to be processed by insurance, and then get that submitted. But don't wait until the last minute if at all possible, because you don't want to miss the deadline. The deadline is a firm deadline, or put it on your calendar a month ahead to give yourself a little bit of wiggle room in case you get busy. But March 31st is that filing deadline. All right, next slide and last slide. is our customer service information if you want to grab a quick screenshot of this or jot anything down. It is, as I said, on our website, asiflex.com. You can reach us by phone during those customer service hours at 1-800-659-3035. You can send us an email anytime, asi@asiflex.com. Just know that we're unable to respond with any protected health information through email. So we would do that through a secure message through your portal. We are based here in Columbia, Missouri. So we're on Central Time. That's why our customer service hours look odd to you, starting at 5 a.m. 5 a.m. to 5 p.m. Monday through Friday, and 7 a.m. to 11 p.m. on Saturdays, to 11 a.m. on Saturdays. So give us a call if you have any questions. I think actually I saw a couple more pop up in the chat. You guys do have such great questions today.
Absolutely. The question that's come through is regarding a treadmill purchase. This individual has a doctor's note dated from November of 2022. However, they made the purchase during 2023. Is this an approved purchase?
If it was within a year of the doctor's note, we would still consider that valid. Yes. Or if the doctor's letter stated it was a chronic condition, that would be fine. However, the 2023 filing deadline has passed, so it would no longer be able to be processed if it was purchased in 2023. That filing deadline is always March 31st of the next year. So the filing deadline for 2023 was March 31st of this year, of 24.
Thank you for that information, Andy. Another question here. Do you have to have an existing dependent to sign up or enroll for dependent care FSA for next year? I'm currently pregnant with my first child, and congratulations. And my due
Congratulations.
date is October 22nd of 2024. So cutting it really close to end of open enrollment, which is October 24th of 2024.
So it is a, a sad reality that sometimes babies don't make it, and I hate to say that. I've been through that myself, but um, if you sign up for dependent care during open enrollment and then something would happen that you would not have a baby that needed childcare or something like that, that would be a hard situation to be in. So the best thing for you to do, because you can make a change based on a qualifying event, would probably be to not enroll until after the baby's born. And then you would be eligible to enroll based on a qualifying event of the birth. Also, childcare, you can enroll based on a qualifying event of a change in provider, which would happen when you return to work and send your baby to daycare or childcare. So either of those would be considered a qualifying event. And I would suggest waiting and using your qualifying event as your enrollment reason instead of open enrollment. That'd be my suggestion.
Yes, and to elaborate more on the qualifying life event, that you would actually want to coordinate and reach out to the benefits division, as we have our specialists who will walk you through the process when you're ready to add baby, as well as elect your spending account, your dependent care spending account.
Great, thank you. Okay, and this concludes my presentation. So I'm happy to stay on and answer further questions if there are any.
Thank you, Andy. And I would like to remind everybody that a copy of this presentation will be posted on the Benefits Open Enrollment website. Additionally, if you have questions after we resume this session, you're more than welcome to reach out to the Benefits Division directly or to your Benefits Ambassador. We're happy to answer any questions that you have. Give it a couple more minutes, Andy, and see where we go from here.
Yes, absolutely.
All right, Andy, a question regarding orthodontics. If my dependent gets braces in November for 18 months and I run out of FSA money to reimburse the full bill, can I use next year's balance for the same invoice?
Yes, so for 18 months, that means the braces would still be on, or expectedly, they would still be on next year, or we're talking about 2026, I'm guessing. The
Okay.
following year, you would still be able to use that same invoice, that same expense, because braces, if you remember, I talked about this a little while ago, are the one expense that's considered ongoing. It is a recurring expense in that the braces are on, they're placed at a certain time, but then they're usually on for a period of 1 to 2 years. And during that time, services are ongoing, services are still being provided. And many people don't pay the full cost of their braces. It's a lot of money all at once. But you could, if you wanted to, you could get reimbursed that way. But if you do a monthly payment and you're still paying for the braces, even across plan years, that's perfectly fine to continue to get reimbursed as long as the treatment's still being provided, which means the braces are still on. You're very welcome. Any other questions I can help with today?
I certainly want to thank everybody again for making time to attend the seminar. And I would like to thank Andy. Again, this is being recorded, but if you do have questions presently, please type them in the chat. We're more than happy to assist.
I see there's one there. As only the copay can be claimed or the whole service, even if the medical insurance covered it. Well, any portion covered by insurance wouldn't be eligible since that wouldn't be your responsibility. So it can't be something that was reimbursed to you previously or paid for by somebody else, such as your insurance company. So if you only have a copay due on a service, then that's the only charge that would be eligible for reimbursement. But if the insurance company comes back and denies a part of the charge for some reason, then there may be additional expenses that are still eligible.
Another great question, Andy. This individual wants to know the initial part about how the money is set aside or gets taken out of their paycheck.
Yeah, and that sort of varies depending upon if you're in the HRA only or if you're also doing a flexible spending account. The flexible spending account is the money that's coming out of your paycheck that you're setting aside for either healthcare expenses or childcare expenses. And that does get divided out evenly over the course of the year. You make an annual election when you enroll. And for example, if you elected $1,200 for the year, it would come out $100 each month, or if you get paid twice a month, $50 from each paycheck. And then you would essentially pay all of that in by the end of the year. It's all pre-tax. So when you have it deducted from your paycheck, it's deducted directly from your gross pay, and your taxes are refigured on that lower amount. So you don't ever pay taxes on that amount that you have withheld from your paycheck. The HRA account, however, is funded by the flex credits. So that isn't actually coming out of your paycheck. Please let me know if that didn't help or if you still have questions. Thank you for your comment, Nicholas. Patricia, it probably would be better for you to call if you have questions that are specific to you that you don't want to put in a general chat. Just if you have a general question, you feel free to ask it now. I'm here for as long as you have questions. But if you have questions specific to your account or anything that is protected health information, that would be great if you would give us a call. The number's on the screen right here, and you can call just as soon as you're off of the, well, I assume you can, unless you have other things to do.
Oh.
You can call right now. Yes, you're welcome.
Well, I believe since there are no additional questions, Andy, we can conclude the seminar. Do you have any closing remarks that you'd like to make?
Just thank you so much for inviting me to speak today. It was a wonderful opportunity. I enjoyed all of the questions, and reach out if you have any additional. You have a wonderful HR team, benefits team, and I know that they are always willing to answer your questions too. But thank you.
We are certainly most grateful for your time, and I hope everyone has a great rest of the day. Thank you again for participating and attending.
Thank you. You have a great day too.